If you are an architect, an engineer, or a designer, Autodesk is likely as essential to your life as oxygen. For decades, this company has been synonymous with AutoCAD. But if you are an investor looking at Autodesk today through the lens of the past, you are missing one of the most significant digital transformations in the software industry. We are not looking at a legacy software vendor anymore. Based on the deep dive into the financial reports from 2021 through the latest Q3 fiscal year, 2026 earnings released in November 2025, Autodesk has quietly morphed into the operating system for the physical world. Today, we are going to deconstruct this transformation. We will look at how their shift to a direct transaction model is unlocking hidden value, why their cloud, platforms Forma, Fusion, and Flow are building an unbreachable moat, and how their aggressive integration of artificial intelligence is poised to accelerate their growth through 2030. To understand the magnitude of the opportunity, we first need to clear up the confusion around their recent financials. If you look at the 2024 and 2025 annual reports, and specifically the volatility in the fiscal year 2026 quarterly data, you might see some noise. This is due to the new transaction model. Historically, Autodesk sold through partners who handled the billing. Now Autodesk is taking over the transaction directly. This sounds like a boring back-office change, but it is actually a strategic game changer. By billing customers directly, Autodesk gains granular data on who is using what, when, and how. This allows them to predict churn, upsell features, and most importantly, own the customer relationship completely. The Q3 Fiscal 2026 data shows that this transition is progressing ahead of schedule, boosting their free cash flow despite the short-term accounting headwinds. Let's dive into the core engine of the business. The AEC sector, architecture, engineering, and construction. This segment generates the lion's share of their revenue. The 2025 annual report and recent quarterly decks highlight a massive trend: the digitization of construction. The construction industry has historically been one of the least digitized sectors in the world. Autodesk Construction Cloud is changing that. Revenue in this segment continues to grow at double-digit rates because the industry is moving from 2D drawings to 3D models, or BIM, building information modeling. Once a construction firm moves its entire workflow to the cloud, switching costs become astronomical. They aren't just buying software. They are storing their entire project history on Autodesk's servers. This is the definition of a sticky ecosystem. But the most exciting growth story found in the documents is in manufacturing. This is where Fusion comes in. Fusion is not just a CAD tool. It is a cloud platform that connects design, engineering, and manufacturing. In the Q2 and Q3 fiscal 2026 presentations, management emphasized the convergence of design and make. In the past, you designed a car part in one software and figured out how to manufacture it in another. Fusion combines these steps. This consolidation is powerful. It allows Autodesk to capture more value from each customer. Instead of paying for 3 different tools from 3 different vendors, manufacturers are consolidating onto the Autodesk platform. This platformization strategy is key to their long-term growth thesis, aiming to displace disjointed competitors. Now we must talk about the elephant in the room: artificial intelligence. Every software company claims to be an AI company now, but Autodesk has a unique advantage: data. For decades, millions of buildings, bridges, cars, and products have been designed using their software. They possess the proprietary data needed to train specialized AI models. In the 2025 and 2026 filings, we see a surge in R&D spending directed toward Autodesk AI. Features like Generative Design allow an engineer to input constraints like weight, material, and cost, and the AI generates hundreds of design options in seconds. This shifts the business model from selling tools to draw to selling tools to think. As AI automates the tedious parts of design, professionals will pay a premium for software that acts as a co-pilot, drastically increasing their productivity. Let's look at the financials. The Q3 Fiscal 2026 earnings deck shows a company that is a cash flow machine. Even while investing heavily in AI and navigating the transaction model shift, their free cash flow remains robust. They are consistently generating margins that are the envy of the SaaS world. The Rule of 40, a metric where you add revenue growth and profit margin, is something Autodesk consistently meets or exceeds. They are using this cash to buy back shares, reducing the float and increasing earnings per share for investors. This financial discipline creates a safety net. Unlike unprofitable high-growth tech stocks, Autodesk funds its own innovation. Furthermore, we need to address the macroeconomic resilience. The annual reports from 2022 through 2024 cover a period of high inflation and rising interest rates. Construction projects are interest rate sensitive. Yet Autodesk's renewal rates remained at record highs. Why? Because their software is mission critical. An architecture firm cannot stop paying for Revit. Just because interest rates went up, if they do, they go out of business. This subscription model, largely finalized in the early 2020s, has turned Autodesk into a utility-like business with the growth potential of a tech stock. Finally, let's look at the future roadmap. Described in the latest investor presentations, the company is moving towards industry clouds. Forma for AEC, Fusion for design and manufacturing, and Flow for media and entertainment. They are breaking down the silos between their own products. In the past, data was trapped in files. In the future, data will flow freely in the cloud. This data fluidity is what unlocks the full potential of AI. When a change is made in the architectural model, the cost estimation updates automatically. This is the digital twin vision coming to life. In conclusion, the journey from 2021 to fiscal 2026 tells a story of a company that is systematically removing friction and increasing value. They transition to subscription, they are transitioning to direct transactions, and they are transitioning to the cloud and AI. Each step has increased their moat. The volatility in the stock price often reflects short-term confusion about these transitions. But the underlying data shows a business that is becoming more essential, more profitable, and more embedded in the global economy every single day. For the long-term investor, Autodesk represents a rare combination of stability and cutting-edge growth, potential in the digitization of the physical world.